Long series of posts here regarding foreclosure. My trusty sidekick Merlin is here to help out with this. You've probably seen the reporting. Tampa Bay leads the nation in new foreclosure filings, and as bad and as traumatic as this reporting is, it only begins to scratch the surface. The data is horrendous. In it reports here 1 out of 1,373 homes in the Tampa Bay area had foreclosure filing in October, but the reality is that's not even close to what's really going on. There were so many properties that were subject to disaster holds after the hurricanes. When those disaster holds come off and those defaults start to be reported for real, that number is going to shoot through the roof because those houses are not even being reported in the numbers yet because they're not technically in default yet. But when you look at the entire coastline of Florida, from the armpit of Florida up near Crystal River all the way down to Fort Myers, Naples, when those hurricanes came through, decimated housing stocks. And FHA and Fannie and Freddie, they're still on forbearance holds, many of those properties, and they're not even reporting the worst of what's to come. So when you look at the concentration of defaults that are going to exist all across the state of Florida, it's going to create a disaster upon an already disastrous real estate economy right here all across the state of Florida. So what do you got to do? The single most important thing that you need to do as a consumer when you're facing this financial storm that's coming is just like you would do for any hurricane. When we know the hurricane's coming and we start watching the reports, you start preparing, right? Start boarding up the doors, boarding up the windows, figuring out where you're going to go, what you're going to do. It's the exact same thing now. Got to look at this foreclosure catastrophe, this financial catastrophe that's coming like a Cat 6 hurricane that's going to hit us all in a real big way. And the single biggest expense for so many people is their mortgage. If you look at your monthly budget, maybe it's 30-40% of what you got coming in that you're throwing to a mortgage company. And for many people, that is going to be unsustainable. Many people continue to make that mortgage payment because they believe they've got some equity in the property, number one, or number two, just out of sense of security, right? So you want to keep your family secure in your home, so you continue making that mortgage payment. And, people are borrowing from Peter, borrowing from Paul, doing what they can, scrimping and saving just to make that monthly mortgage obligation. But what we're going to find is just like we did, a decade ago when I had a little less gray hair. People can't afford to make this payment. Not just in the short run. Can you afford to make that payment in the medium run, in the long run? And the answer to the question for millions of people is going to be no. You can no longer afford that mortgage payment. You can't afford it today in 2025, but if you target out just a little bit, no way you're making that mortgage payment in 26. How do you know that? Well, look at how your income is based, particularly people are performance-based income, sales income, you get bonuses and things like that. If you're waiting for that 25 bonus to come along, maybe the numbers are still there, but target out into 26 and for damn sure the income isn't going to be there. The bonuses is not going to be there. We're having record layoffs, record unemployment, and that's only going to accelerate. So you have to plan now. And what does planning now look like? Number one, it means getting real honest about what is the value of that asset that you're paying into. A lot of people have second homes. In the real estate boom, had tons of people that were taking out mortgages, buying second homes, rental properties, Airbnb. Some people had some decent business models doing that. But when you look at the financial model now and you understand that that property is underwater, if it's not now completely underwater, it's going underwater. Then every time you make a mortgage payment, particularly on that rental property, second home property, every time you make a mortgage payment going forward, you're losing money. And when you think about that check you write each month, $3,000, $5,000, $6,000, it's coming out and you're paying into an asset that's depreciating, you're blowing that money. You're wasting money. So the first thing you got to do is be real honest with yourself, really objective about what is this asset you're paying into. And even if it's your homestead and you're paying into a homestead that the value is declining or crashing, then it's time to take a hard look at whether you continue to make that payment. Now, are there going to be consequences if you stop paying? Absolutely. Bank going to file foreclosure? Absolutely. But you've got to weigh those consequences against the risk of not having any money. So when you think about making a $5,000 mortgage payment a month and you're depleting savings, you're depleting what you need to protect your family going forward, you got to balance that risk with credit you know is already going to get shot. But I think the risk of credit being shot and the risk of the financial implications is going to be far less significant than the risk of having no money and being in a desperate financial circumstance in 2026. So, first piece of advice, get your budget in order. Take that pen and paper out, write down what your income is now, what your income is going to be in 26, and make a real hard decision about not making mortgage payments going forward when you know the financial crash is coming. What is foreclosure in 26 going to look like? Well, hard to predict. I can tell you that for 10, 15 years of doing this, I knew for certain what foreclosure was going to look like. I could tell people with rock solid certainty, come in this office, we start defending you, you're going to stay in that house for a year or more after not making a mortgage payment. And frankly, many times it was longer than that, 2 years, 3 years even. Crazy circumstances, 10 years that people lived in homes not making a mortgage payment. One in particular I can think of right now, I was supposed to have a trial a couple days ago. And 15 years that a mortgage payment hadn't been made. Well, folks, I can tell you this. In 26, it is not going to look like that. When this foreclosure machine gets ramped up from the plaintiff and the mills, no longer is there going to be the kind of federal protections and the financial incentives that were used to keep people in their homes. It's going to be bad, and it's going to get bad real quick in 26. So when you keep that in mind, about how you're going to conduct your financial affairs, for many people it's going to be we're not making payments going forward in 26.